So my name is James Pauley, and I've been in IT or business now for about 30 years. I started out working in an aluminum manufacturing plant in their warehouse, doing inventory kind of things. But I then got into international transportation and logistics, so I was doing import-export business. I was really keen on the new emerging technology at the time was PCs and leveraging those into business. So, I got focused on the computing side and made some improvements there, and that kind of led into my IT career. I left that company after 13 years, went to Microsoft, was a systems engineer, worked on their electronic commerce data interchange environment, so all the data coming in and out of Microsoft. I was responsible for the service operations and engineering and support for that. I then moved into a more of a incident management, process management role as a program manager. I formed their major incident management organization within IT, and then later worked on venture integration programs like Nokia when we purchased them. About 2013, I got interested in this little thing called Bitcoin. So I started investigating it. I found out about mining, set it up on my computer, started doing mining. It was interesting at those times when the price spiked to $1,000, it was like, hey, Marianne, my wife, I've made some money on this. I'm going to go more into it. So I started buying hardware and doing the mining. But one of the kind of aha moments for me with my background in IT, electronic data interchange, and international commerce was the fact that with my earned Bitcoin, I decided that I was going to go and purchase bigger, better hardware. At that time, and it still is, not as much so, but that time you had companies out there saying, hey, we'll sell you Bitcoin mining equipment. You pay us now and we'll deliver it in 6 months. Right? It was kind of a pay in advance, we'll get it developed, because it was that new and leading edge. But I found a company in China called Bitmain. I went online, took my transaction on their website, said, would you like to pay in cryptocurrency? I paid for it in Bitcoin. And in about 30 minutes, I got email notification that, hey, your transaction's approved. Then the hardware showed up on my doorstep 3 days later from China. So being from an international logistics and transportation background, EDI, seeing that transaction happen smoothly without having to do a wire transfer, international line of credits, use my credit card, it was really an aha moment for me that somehow this is going to transform how we do things. So I got more interested in the mining part of it, but I also started becoming more familiar with, hey, what is this technology? How is it being used? How is it being leveraged in other areas?
So what is mining?
Mining is basically the processing of transactions within a blockchain. We'll talk a little bit further into it. Different blockchain protocols use different mechanisms for validating transactions. But basically, mining is what secures the ledger of information. And we'll go into those details. So we'll cover some of that. If I don't answer your question at the end, we can bring it into the discussion. So that's how I began my journey with blockchain. I've been attending conferences, meetups on blockchain, learning about how this technology is evolving. And it's been evolving at a quick rate. And in the last year, it was interesting. A lot of interest was generated because of the pricing of the cryptocurrencies went through the roof. So a lot of people were talking about it. So the first thing I wanted to talk about is, basically trust. What is trust? We put our trust or confidence in entities or individuals to manage transactions for us. We trust in the fact that if we give someone a $100 bill, they're going to accept it for $100 worth of value, and that they're going to be able to take that $100 to the bank. Now, you won't be able to take this $100,000 bill anywhere. It was a gold certificate that was used between the Treasury and central banks at one point in time. The interesting thing about trust is that we always put trust in other individuals to facilitate transactions between us and someone. Today it's your bank. Today it's your mortgage escrow holder that's brokering that exchange of value between you, the home seller, and the buyer. They basically act as a trusted agent to ensure that all the activities are appropriate, the person actually has title to the property that they're selling, and all of that. And PayPal became very prominent with the internet and places like eBay, where it became a trusted payment method between individuals. Hi, welcome.
Hi, I'm Maurice.
Hi, Maurice. I'm James.
Nice to meet you.
Nice to meet you.
This is my friend Ken over there.
Yeah. Maurice is dearly in love with
Oh, awesome.
yeah.
So what I'm saying is that part of a blockchain is how it leverages and replaces trusted third parties. The interesting thing here is the Game of Thrones reference. You have the Iron Bank representative, and the thing I found interesting about this photo is he's carrying around his ledger of accounts, of who owes what to who, right? So you have these trusted individuals, entities that perform a function for us today in society. So what is a ledger? Basically, we all know what a ledger is. It's a method of recording transactions in and out for our business, for our checking account. And over time, it's been recorded several different fashions: on clay tablets, on papaya, in books, in spreadsheets, in databases, and now with blockchain on distributed ledgers that are maintained electronically. Before we go further talking about blockchain, I wanted to talk about a little bit about what is Bitcoin. So Bitcoin is a cryptocurrency. It was intended to form as a digital electronic cash, and it actually wasn't unique or the first time that had been attempted. There have been several attempts before for digital currencies or digital value exchanges, but they didn't quite catch. So in August of 2008, the Bitcoin.org was registered. October, 10 years ago, the Bitcoin white paper, which you see a snapshot of here, was published on the internet on a peer-to-peer electronic cash, electronic currency. It was published by a gentleman named Satoshi Nakamoto, which is a pseudonym for either a group of people or an individual. No one knows for certain who that was, which is the kind of mystery to the foundation of Bitcoin. In January 2009 was when the first Genesis block was created, and in that block it said, I think it was the London Times, on 03 January 2009, Chancellor on the brink of second bailout for banks. So this was initiated and published when the banks were going through the mortgage collapse. Banks were being bailed out left and right, and the concept was if we had a peer-to-peer electronic cash, we wouldn't be dependent upon the banks for that.
Who issued the first that first coin? Was it Satoshi?
Yes, the first block was issued from Satoshi, the Genesis block. And then my understanding was he and another individual were running nodes, and then it got pushed out further. And that's where the Genesis block was where the mining comes in. The process to produce the first block was initiated at that time. And then from that Genesis block, the ledger records each new transactional block, and it actually cannot be changed. It's immutable once it's been recorded in the ledger. So fast forward to today, you have a lot of talk about blockchain. And the interesting thing about Bitcoin is it actually has several components, but the two primary components are the token of the electronic currency, Bitcoin, and then the underlying blockchain, as they've coined it now, which is the distributed ledger which records all of the transactions. So in the Bitcoin protocol, Bitcoins are minted when you do the work to encrypt and validate a transaction in a block. When that block is created and it's confirmed that you've found the next block of transactions, or you validated the next block of transactions, then the individual that did that work gets rewarded with Bitcoin. And the protocol was set up to reward 21 million Bitcoins over the course of its history. So there's a limit to how many will be generated, and the number is decreasing over time. So it's halved, I think, 3 times since then. So
is there so like a time limit, like everything will be mined within 20 years, or does it, if it's continuously halved, does it go on forever, or do you know?
I don't know the specifics. In my mind, 2040 is what appears to be when the last block will be mined.
Got it, okay.
At the same time, for rewarding the processing of transactions, there's a transaction fee. Mm-hmm. So the thought is that either transaction fees will go up, or we will have a reduction in miners, right?
But someone will need to verify each block.
Correct.
For Bitcoin anyway, that's just as you did in just Bitcoin.
Each block moving forward past the reward. So that's an interesting dilemma of what will happen after that, and what will make it profitable for people to continue to process the transactions. There's the transaction fee component of that. And Bitcoin, the reason I brought Bitcoin into the discussion is kind of the foundation of, within the white paper and the Bitcoin protocol, Satoshi and the group that he worked with brought together some technologies that have been around since the 90s, of cryptology, peer-to-peer networks, and a protocol that they developed, which, when you think about digitally exchanging things, how do you know that when I gave Ken this digital dollar, that I didn't just make a copy of it and give one to Dean of the same one? So what the underlying blockchain and or distributed ledger does, it keeps track of, okay, Jim earned 50 Bitcoins from mining, and then he turned around and gave Ken one and gave Dean one. That transaction is recorded in the ledger, and we'll get into the details about how that's accomplished.
Do you know who coined the term blockchain, or when that happened?
It happened within the last 3 years was when blockchain, because originally it was all about Bitcoin and talking about Bitcoin.
It's that new, the blockchain word. Interesting.
The blockchain word came, in my recollection, in 2015, 2016.
Got it, okay.
Because I was going to a conference at the time, and it started out being, the annual Bitcoin conference in New York City, come and go to it. By the time I registered for it earlier, and 6 months later when they started publishing it, was all about blockchain.
Huh.
And the consultants, the consulting firms were all Gartner and company, were all at the conference, and it was all about blockchain. And the reason was that the interesting thing about it is it reduces friction to exchange value. It doesn't take as much time. And we'll just cover some of that further on. And I'm happy to answer questions as we go with a small group like this. So we talked a little bit about this, and that a blockchain is a digital ledger in which transactions made in Bitcoin or another cryptocurrency are recorded in time order and publicly. So basically, you can go into blockchain info, and you can enter a transaction ID, and you can see what happened within that transaction ID, who the sending address was, who the receiving address was, and where the inputs and outputs came from, where the inputs came from, where the outputs went. So it keeps track of that ledger of all of the transactions from the Genesis block forward. And it does that by using public-private key encryption. So on the blockchain, your wallet is actually a public-private key pair that allows you to, one, with your private key, encrypt information to send. And then with your public key, you can then, if someone uses your public key to encrypt information, you can use your private key to decrypt that same information. So when I send a transaction to someone, I'm sending it to their public key, I'm encrypting it, sending it to their public key. Sorry, I'm getting a little confused. Any
It's
You're
questions
easy
on
using
to
the
that?
public
confuse, yeah.
key to encrypt it.
Using the public key to encrypt transactions to the receiver, so
Right.
that they can decrypt it
Using
with
their
your,
private key.
right, exactly.
Got it.
So on the distributed ledger, in blockchain, in the Bitcoin ledger, you share your public key with people to send you funds. Then in the ledger, it gets recorded that your public key received those funds. And then the only way for those funds to be moved out of your wallet is to create a transaction and sign it with your private key, right? So I have a wallet, someone sends me 1 Bitcoin, I then want to send half a Bitcoin to someone else. I would then go into my software wallet and create a transaction with their public key and then use my private key to authorize that transaction out to them. And we'll talk about this in some of the challenges. It becomes really, as you get on all these distributed ledgers, it's about managing your keys, keeping them secret, because if anyone ever gets a hold of your private key and they know your public address, they can start pulling your transaction.
Or if you lose your key.
Or if you lose your key, right, exactly. So one key to rule them all. The blockchains also have the concept of peer-to-peer networking, where the transactions within them are exchanged between various nodes on the environment. So, and that's kind of where the mining comes in. The miners are basically, you're publishing a transaction to the Bitcoin network. The network says, okay, I've received these transactions. I'm then processing them according to the protocol for Bitcoin, which uses SHA-256 encryption, and does a mathematical problem which produces what they call a nonce, which is a number that can only be produced if you've done things correctly, is my understanding. And that says, okay, I think I've found the solution to this block of transactions as a mining group. And then the other miners will say, oh, okay, someone found it, let's validate. And so once they start validating across these nodes, and then they all lock that into the permanent ledger. So that's a process where through a peer-to-peer network, people are evaluating blocks of transactions that are being created. They're saying, yes, this is a valid block. People vote on that valid block, and then it gets encoded permanently into the ledger.
So when I do a transaction, do I basically just throw this out to the entire Bitcoin network, and they grab it as they will, and then whoever finishes it first gets the credit for it, and then it's published, they publish the result back to the global network.
That's correct.
Which then, at that point, it's incorporated into the chain.
It gets incorporated into the chain.
Which gets longer and longer.
And it gets longer, and it also, they say it takes 60 minutes to validate a Bitcoin transaction, but the fact is that a block is created every 10 minutes, and that's been controlled by the amount of processing power put into the network and a difficulty added to it that makes the mathematical problem more difficult to solve.
But again, this is the Bitcoin blockchain, not necessarily other.
That's
blockchains.
true, yeah. And So every 10 minutes, a block is created, and every 60 minutes, a block is what they call validated. And validation is basically that 6 nodes in the peer-to-peer network have agreed that this is a valid transaction block. So most transactions, if you send something to a company, they'll wait for a minimum of 6 transactions. But from that point on, all the other nodes are still going through and validating, because at the end of the day, then those transactions are validated hundreds of times. And, it's just how long do you wait before you're confident that it was encoded permanently in the block?
Is there error checking in this, or, I mean, do people come back with false answers? But generally, if 6 agree, you probably got it. Is that kind of a solution?
So there is error checking in that, well, within the Bitcoin protocol, they use a Merkle tree. Mm-hmm. So part of the processing is hashing that block and getting the hash of that block. But each block contains the Merkle tree from the hash of all the previous blocks. So it keeps that tree and hash moving forward. And that's how they keep. So if someone came in with the wrong hash value for the previous blocks, it would start being rejected.
Okay.
And then the final component, so you have the cryptology, what's used to do identity and also maintain your account. You have the peer-to-peer network, and then what you can't see on the right is the protocol that's being used on the blockchain to validate transactions, the throughput of the transactions, and all of that.
It seems remarkable that these guys developed this code and released it out into the wild, and it's just right off the start with, with like no tweaks to their code or anything. The whole thing just was successful.
Pretty amazing.
Well, I don't know that it's been tweaked over time. So Satoshi, they issued it in 2009 in January, and there's been a core group of developers working on it ever since.
Oh, okay, got it.
Adding functionality, features, fixing bugs.
Okay.
But nonetheless, it had an astounding amount of correct work right out of the bat.
Out of the bat
is amazing.
Yes. So
whoever they are here.
Yeah, right.
So far, the Bitcoin protocol and the process hasn't been broken. Right? They haven't been able to break it. Now, if you were to get your hands on the key, private key for the original block,
right,
you could crumble the whole thing.
Right.
So that's an interesting concept as far as the long-term viability of it. A lot of people bring up, supercomputers, quantum computers.
Yeah, right.
But the fact of the matter is, if we have quantum computers that can break SHA-256 for Bitcoin, we have bigger problems too.
Yeah,
right?
Yeah, that's true.
So we've talked a bit. Does everyone understand public-private key processes? So
totally.
What's that? Not totally.
No, totally. I'm joking.
I'm afraid this is all way beyond me.
Oh,
Thank you.
Thank you for coming anyway.
Okay.
So the public key cryptology used in the blockchains, whether it's Bitcoin or Ethereum or others, is basically a methodology so that you're able to sign transactions that you validate from your wallet. And so when we talked about this earlier, that your public key and your private key equals identity. And it was interesting because 2 years ago, Craig, I don't remember his last name, from Australia came out and said, I'm Satoshi Nakamoto, right? I created Bitcoin. And he had all this, he was doing stuff around it, but at the time, I was actually in New York at a conference, and Vitalik Buterin was on stage and said, well, if he is Satoshi, then he should be able to sign a transaction or a record with his private key, and that'll prove it, right? And it was like a couple days later,
Crickets.
crickets, right? You didn't do that because it was an interesting drama, let's just put it that way. But part about the public-private key, it kind of makes things solid. You know? If you have the private key, you can encrypt things, you can validate that you're the owner of that, and that also is where people get hacked if someone gets a hold of their key. Right?
You have to assume that that group created that initial transaction, then maybe they just destroyed the key, knowing exactly what you said.
Yeah. There have been, I listened to a podcast on, I believe it was Zcash, and how they created their initial key. And it was, it was a 30-minute podcast on, they just got in vans, they drove around and said, oh, we're gonna go to this Best Buy and buy a computer. We're gonna drive around some more, and we're gonna go to this hotel. We're gonna create a barrier around this computer, and we're going to create part of the key, and we're going to be having 6 or 7 other people around the world doing the same thing, and putting in their pieces to this device, creating the key, initiating the first block, and then destroying everything related to the creation of that key, just so that
So it was a true random number.
You know about the wall of lava lamps? I think it's Cloudflare.
Cloudflare, yeah.
And to generate random numbers, they have a room full of lava lamps that they have cameras trained on, and I guess that picks up traffic, vibrations from the traffic or whatever, to try to make it as random as possible. Random numbers are really hard.
Do you know anything about how the Winkle brothers, they have, or whatever they're called, the guys that were part of
Winklevoss?
Yeah, so somehow they have to protect all of these bitcoins, they have in safe deposit boxes, they have fractions of those bitcoins stored, and they have like these, it's in paper documents, but they have them like chopped in 2 or 3. So you have to actually get like several of these things together from different places.
Right.
And do you know anything about how that works?
Yes, I do. I have a safety deposit box with my
You're doing the same
private
thing?
keys, yeah.
Okay.
And so basically, since it's a public-private key, which is a 256 character string, right? Your wallet can be a paper wallet, right? A printed piece of paper with your public key and your private key right there for anyone to read. Right? The reason why that's advantageous is it's not in anywhere digital. No one could hack your computer and get it, right? So I print out paper wallets for some of the key assets, the crypto assets that I have. I have them stored in several locations.
Do you anticipate typing in the numbers, or do you create a barcode or something?
It depends. I anticipate typing in the numbers, but I also have an encrypted like backup drive that I also have in my safety deposit box.
So isn't this an issue though? I mean, talking about blockchain, that's a pain in the butt.
Yeah, and we get into that.
Yeah, look, go ahead. We should stop interrupting.
No, I'm loving the questions because it's helping me. Peer-to-peer network, we talked about that ad nauseum. Basically, 2 people are sharing information, and Napster was one of the first peer-to-peer networks of sharing music between people, and BitTorrent is another one. There's a blockchain-based one. It's called the Interplanetary File System, which is converting their name to what they're calling Filecoin.
Oh, I've heard of Filecoin.
And basically, what they're talking about there is the web is kind of impermanent. Yes, you may be able to go out and search for anything there, but there's no guarantee that tomorrow when you go to search for a web page or information that it's going to be there. The IPFS is intended to create a permanent record of things that you publish on the internet with a reference that you can pull the information from this peer-to-peer distributed file system.
And there's another startup, a small one out of Hawaii, called vTernal. It's not yet public, it's in beta. And it is, stuff is stored, bits of your data are stored on multiple computers or phones or Xboxes or whatever. You have a 256-bit key, which you can store in your wallet or whatever, and it's there forever because it tests it periodically, and if part of it disappears, it recreates it somewhere else.
Sounds like Pied Piper.
I'm not full of Pied Piper. I know
no.
about Filecoin, but not Pied Piper.
That's from a sitcom called Silicon Valley.
Oh, okay. Oh, got it. Now it's in place, yes. Never mind. Anyway, it's real.
So blockchain, we talked about public-private keys, and also the peer-to-peer networking to record and maintain transactions. And then there's the protocol within a blockchain, that's the programming language that makes, how do I submit a transaction, how do I receive my funds. It's the underlying programming what causes the blockchain to do what it does. And the left diagram is basically a representation of a block, the different blocks recorded at different times that get encoded and permanently recorded in the ledger. Now, all of the nodes within a blockchain system have all of the transaction information, so they record and keep that, either the hash of it or physically have the data in the environment.
Do you know how many blocks are in the current blockchain?
That's
For
an
Bitcoin?
excellent question, but I don't know. But we could look it up.
Ask Siri.
Block info. Blockchain info would have that.
I bet it's in the billions. But
Yeah, it could be. So then, so fast forward to today and where we're at with the interesting things has been, one, with a peer-to-peer currency exchange, I can exchange money with value with you in Bitcoin or Ethereum or whatever, without having an intermediary that's recording it, right? Or needing an intermediary for that. And what the blockchain does is says, I have funds to spend on my address. I validate that I'm spending these funds with my private key. That gets encoded into the blockchain as having been sent to your public key, which is your wallet address. So therefore, in that ledger, it shows ins and outs of every transaction. Regardless of whether I got one Bitcoin and sent you half of one, it keeps track that I still have half of one.
mm-hmm.
And through the protocol for whichever currency it is, it keeps track of those ins and outs so that we know that you now have half a Bitcoin and I have half of one myself.
Right.
The thing is that, so because cryptocurrencies are kind of, one of the big initial use cases was with that dark web website where they were selling everything from marijuana to assassins. And the guy was prosecuted and put away for life. What was that website called?
Silk
Oh,
Road.
Dread Pirate.
Silk Road.
Right.
Dread
Pirate Roberts.
Exactly. So he's made Bitcoin pretty infamous, as well as all the malware that locks up your computer and asks you to put it down in Bitcoin. So over time, I mean, people have been leveraging it to do transactions. I talked about initially when we kicked off of my initial transaction of earning Bitcoin and then buying hardware with it delivered to me without banks or credit cards. There's a lot of use cases like that. There's the famous, $22 million pizza where someone bought a pizza for 1,000 Bitcoin at the time, right? And in today's dollars, it would have been millions of dollars.
But
Or
again,
the
you
guy
have to
that
separate-
lost 5,000 Bitcoins in the dump because he threw away his hard drive.
But you have to separate the Bitcoin mania from the blockchain
Right.
technology behind it.
So There's the currency part of it, the speculation, yes, and then there's the underlying technology that allows you to exchange assets in a predictable, recordable, and trackable fashion. And that's why blockchain has become a focus of different industries, including finance, supply chain, IoT, and different areas. So the other thing about most of the blockchain protocols is that they're open source and public. So you've had different groups start up. So Bitcoin has Bitcoin Cash. Ethereum has a variance of it, like Neo and EOS, things like that. Public versus private blockchain. So if you think of Ethereum, you think of Bitcoin, Litecoin. Those are all public blockchains that have a currency or a token with them. Private blockchain groups are looking at how can we use blockchain technology to exchange with our trading partners, and how do we record that. So there's several platforms that are being generated out there. On Ethereum, you have Hydrochain, you have multi-chain, IOTA, different that are trying. It's like the Wild West of .com boom eras,
Times 10, or times 100.
where anyone with can get to open source code and spin up their own blockchain.
Do their own ICO.
Well, we'll talk about ICOs in a minute. That's a whole other story.
So with a private blockchain, let's say the one by Walmart, it's centrally controlled anyway. So
Right.
what's the advantage having the blockchain there?
So it depends on what the use case is, right? If you're just trading between your divisions within your company, why aren't you just using this database, right? Or some other method of transacting between them? It's when you may want to maintain, when you don't necessarily trust the other party to be providing the information, or you want to.
I think
Go ahead.
I think there are two different things, right? So the proof of work thing or those things that happen in cryptocurrencies is different when the trust is not there and it's decentralized. But I think if you want to maintain some kind of a chain of audit, like audit trail of a sort.
Across
right?
organizations.
Yeah, but the point is basically because each block has a hash of the prior block, right? And so basically you know that this is not tampered with, right? So it's like tamper proofing that you cannot just insert something in the middle. So I can see a use case in a private blockchain where you want to make sure the sanctity of this series of operations.
And even
Untampered.
even databases can be hacked, right? And,
Yeah,
I mean,
exactly.
the system administrator can go in and
Not my database.
Not your database.
That's funny.
there are encrypted fields and stuff.
Yeah.
Yeah.
But-
Some databases.
But like in the case of Walmart, right? So they've got farm, right? Like let's say it's lettuce or salad, right? You harvest that and you put that from a certain section of the farm into crates, and then you would do a blockchain transaction, right?
Right.
And then when a whole bunch of crates come together and they get put into a larger container, maybe there's another blockchain transaction, and then the container gets shipped from the farm to a distribution center. Then there's another blockchain transaction. So apparently, like in the Walmart case, that traceability previously would have taken days, and now they can do it in minutes.
Yeah, I just sent you an article about this very question, which is why did Walmart go with the blockchain? And they felt that they said it could have been done with the database, but they felt with all the different suppliers, it was easier to do it this way.
Right. And
So
then
this is a chain of custody solution
Yeah.
versus like an encryption or a data.
This is a chain of custody for fresh vegetables.
Okay.
So they,
and it helps to track the provenance of the goods, right? So
Right,
you came from this plot in the field. It was grouped together here. It went here,
Yeah.
And it was actually distributed further, but you can track that ins and outs rather than throughout the supply chain.
Yeah.
Which, they talked about using it for that, or shipping goods, consolidating goods, shipping them, or even manufacturing a phone.
Yeah.
Where did all the components come from? This phone is composed of components that came from
Sure.
these source items that each have their own unique asset ID that's encoded in some of the materials blockchain.
So it almost sounds like if I did not catch this article, so I was out of context on this one, but I think it almost sounds like Walmart could have solved this problem with another data structure or something, like not just database, like something even simpler. But I think they did it because blockchain is hip, right? So that would bring like this spotlight on Walmart, and I think
Right.
that's not a bad thing for them. But basically, it doesn't sound like blockchain is meant for that use case. It was, I think it's a.
But they have a huge influence on it, because I talked to my wife about it. She used to work in logistics, and she lived during this time when Walmart enforced EDI. Like before, there wasn't really EDI, and like, okay, now we're gonna have EDI transactions for all the stuff that we do related to, and so they can really set standards within the industry.
Right.
I'm going to post this article on our meetup page. I think it answers some of these questions. I haven't read it all because I just
And
saw it. But
the key thing to understand versus public or private blockchains, public, as Robbie pointed out, are less, they're less, you're not trusting, you're putting the trust in the blockchain that it's going to know that Dean has coin to send to me, or Dean owns that property that he wants to sell to me. Right?
Mm-hmm.
It has that provenance or that tracking of that transaction. A private blockchain, it all depends on how they want to set it up. Are they going to have nodes that are the authority of these are valid transactions?
Yeah.
Right? And how do they agree upon if they're comfortable with that? Right? And there's several different. It's not showing up well here, but you have proof of stake. You have you can proof of authority. There's all different types of proofs.
What is proof of authority? I recently heard about it, but I don't know anything about it.
Well, in fact, can I interrupt and make a more general question? This is actually really interesting. This whole thing of on the private keychain, what replaces mining? Or is there still mining? And is proof of authority, or is that still mining? Does it still eat up electricity?
So things like proof of stake. So today Ethereum is a proof of work network, but they're working towards making, it shows up here that it's proof of stake, but they're wrong. It's not proof of stake.
Not yet. They're working towards it.
They're working towards releasing a version of the protocol that will make it proof of stake. And proof of stake is rather than, proof of work is all about you have to perform a tremendous amount of mathematical processing to prove that you created this transaction and that it validates with the hash or Merkle tree of the previous validated transactions, right? Proof of stake is more of, I stake out 10,000 Ethereum, Ether, that I'm staking my 10,000 Ether on the fact this transaction is valid. It's kind of a mechanism there.
So if it's proven wrong, your stake could be
You lose your
confiscated.
stake, right?
Right.
Yeah, that's the concept behind it. Or you become less trusted, you have less opportunity to stake out transactions. And then others do other mechanisms. So in my presentation, and I'll share it out, I've put links into all of this, and there's detailed articles on each one of these areas. So if you have interest in diving into them.
But again, go ahead.
Now just like so proof of work is that mathematical work that has to run, which is the electricity consuming thing, right? Now proof of stake requires no electricity, really, right? As long as you own 10,000 Ether, you can stake them, and if enough people stake,
it still requires computer processing somehow to keep track of
But
distributed
not the
ledger.
huge amounts of mining? Or
But you're not solving these huge mathematical problems to do.
which is part of the mining, right?
Right.
Which is kind of like you're saying, because why do I trust you, or like somebody can come up with this voting business and like have 100 machine, 60% machine on the network, and suddenly they can do whatever to the blockchain, and that's why the work is there. But when you have a stake-based one, you are actually saying that, okay, I'm rich, so kind of I must be right.
Trust me.
Yeah, trust me, exactly.
Trust me, I'm J.P. Morgan.
Yeah, trust me, I'm JP Morgan, exactly.
But again, how does it work in a private blockchain? You know, I could just put a block out there, or is there still?
See, private blockchain has nothing to do with mining or
Well, that's what I'm trying
cryptocurrency.
to find
It's
out.
not cryptocurrency at all.
So if I'm
You're maintaining your own distributed ledger in whatever fashion you've chosen to keep track of records of exchange of.
Right.
Right, there's
So
no
there's
mining.
no
that goes-
mining involved.
With
no
Walmart, there's
process.
no mining at all.
Right.
That's,
So
it's,
I
it's
create
just,
a
it's
block.
a distributed ledger.
Yeah.
Right. So
Mining
I-
is only for currency. Let's just clear
Right.
this up. If there's no currency, there's no mining, for
Right.
sure.
Okay.
Right? And so I think in that case, if I understand correctly, the only way private ones are useful is because it's a tamper-proof chain of events that you cannot insert something in the middle,
Right.
because every block contains a link from forward and back link. So you cannot like just insert something in the middle saying, oh, by the way, I did this at this time. Like this is like tamper-proofing.
It's tamper-proofing, and also private blockchains, they're starting to look at leveraging them for, interbank transactions and intra-country.
Right, audit trail
exchanges,
basically.
Right.
It's a fancy auditing system.
Yeah.
It is.
And
I
even
can
for
see
stock transactions, like on the stock exchange, which right now it takes like a couple days to actually complete a stock transaction, but apparently with blockchain, they think they can cut it down significantly.
Never been
Right,
clear to me why
because,
it takes so
because
long.
you have the record of the fact that this account owned these stocks. It's all in the ledger, and this account had
Yeah.
authorized the sale,
Mhm.
created a transaction to sell it, and the account that it goes to, right? You don't have that clearinghouse of, well, does this person have these stocks? Let's go check in the file drawer. I know they don't keep
Right.
money.
Depository, whatever they call it.
But, yeah, so the interesting thing that I found in working with cryptocurrency is that, for example, I talked about a transaction I did to buy hardware in China, took 30 minutes to validate. And then I got my goods in 3 or 4 days on my doorstep. But if you think about transactions today, if you do an EFT, depending on your bank's policies, you might get it tomorrow or you might get it in 3 days.
But that's not a technical issue, that's what they decided
Exactly.
to charge. It has nothing to do with the technology.
It's
Exactly.
regulatory.
I buy something on eBay, I put in my credit card, it comes from China in 3 days anyway, and it
Yeah.
doesn't, what's the advantage of
I
blockchain?
think it's a carryover from mainframe days when they would do a bunch of transactions and then they would consolidate
Reconcile.
everything every night.
Yeah.
Right.
Yeah, the
Right, so-
reconciliation process and everything. Probably they still have some of those mainframes.
No
So
question
big
about
banks
those
probably
things,
have
yeah.
them.
Anyway,
So, any further questions of public versus private?
My interest in the blockchain that relates to recruiting and staffing. So a lot of it has to do with identity, and attaching things to sort of attributes to people's identity. So
Right.
I am a graduate of the University of Washington, right? That's part of my identity, and someday that will be validated as part of a blockchain. It will be out there, and it will be connected to my identity and all kinds of other things, my work history and whatnot. So that's what I'm looking for, is things related to that.
Sure, well, we can talk about some of that. I have some content in here for that.
Excellent.
So, smart contracts. So that's a hot topic as well, is smart contracts. So one of the things with Bitcoin was out, and then Vitalik Buterin created a divergent, or his own version of that called Ethereum, which basically they publish it as a Turing-complete distributed computer. And within the Ethereum blockchain, they have a language for programming what they call smart contracts. And it's done in their language. It's called Celerity. To create a smart contract on the Ethereum network, and basically that contract will sit there and process transactions in and out based upon the programming of the contract.
Which better be right.
Which better be right. Right. One of the first implementations of that on Ethereum was the distributed application, distributed organization, and it's famous because it had I think $70 million hack or something along those lines. It actually forced Ethereum to. So one of the things about blockchains in the public space is that it's supposed to be immutable. No matter what happens, that ledger never gets changed, right? So the Bitcoin maximalists would say Bitcoin ledger has never been changed. What happened with Ethereum is here's this huge, millions of dollars were siphoned off this smart contract that people put in money into, not physical dollars, but put money into. So there was a huge discussion within the Ethereum community of how are we going to do this? Are we going to fix this? And basically what came from that was a decision was made by Ethereum.org that we are going to roll back the blockchain to before those transactions occurred, and we're going to move forward from that rollback point with transactions basically saying any money that you lost in the Ethereum network is now back in your wallet.
Which completely obviated the point of the smart contract.
Right.
It says we failed. They don't spin it that way.
Actually, the thing about it is it wasn't necessarily a failure. It was a failure of the smart contract. It had a bug in it.
It was a bug, yeah. It's software.
But the point is, and I do want to make this point, the smart contracts are supposed to be ironclad. What you see is what you get. The whole rest of the world, we're set up to deal with contracts that don't quite work because it happens all the time. That's why we have lawyers and courtrooms and judges to fix these little issues. And in essence, Ethereum.org played the role of judge and jury there and made a human decision.
Well, actually,
overriding
it actually is a little more complicated.
Well, yeah.
Because what they said is that what we propose is that we roll back the Ethereum network blockchain to this point, block whatever, right? And what happened in practice was there were people in the industry that said, no way, we're against that. So what happened is Ethereum actually forked.
Oh, really?
It forked into Ethereum, continuing from a rollback position to Ethereum Classic. And that's where Ethereum Classic came from, is a group said, no, we're not going to do that. It's open source code. We're going to continue the blockchain as it was. And that's where Ethereum Classic came from.
I wonder how much the valuation of Ethereum went with Classic versus new Ethereum?
It went with Classic.
It didn't really?
No, I'm sorry. I went with
the
Ethereum,
new.
right?
Oh, okay, got it.
But Ethereum Classic went up as well. So,
But
the interesting thing for you as a kind of stakeholder in this blockchain was, if you had a wallet on the Ethereum network, you then had a wallet on the Ethereum Classic network with the same amount of ether in it on both networks. So basically,
it was
it's forked and split.
Stock split.
So you ended up with the same amount of Ethereum and Ethereum Classic.
Was the issue in the smart contract, or was the issue in relating to like the way the smart contract was programmed, using that programming language, or was it in the technology that supported the smart contract?
That's a good question.
My understanding was that it was in how the smart contract itself was built, not the underlying protocol.
Okay, got it.
There was a vulnerability in the code, and that somebody exploited actually.
Right.
Not in the underlying technology in the smart
Not
contract,
in
in that
blockchain,
particular
right.
smart contract.
That's my understanding.
Right.
But the interesting concept here is that you can create a way to automate exchange of value. So I go into an Airbnb and I stay. My smart contract then I pay the smart contract of the Airbnb owner. Or I have a dog walker and I have my dogs tracked on GPS, and I see they walked around New York City for an hour, as I contracted the dog walker to do, the smart contract would then automatically pay them.
Oh, interesting.
You cut out the middleman.
You cut out the middleman, or having to have, you can create automated value exchanges that have some method of being validated. That if this happens, then pay this amount.
Are you familiar with Tazvo, I think it's called? Because one of the things that they were working on was dealing with the human issue. Thanks for coming by. So they're building a whole organization around dealing with what happens when you've got a problem like this.
Right. So,
So with that, we end up with Ethereum Classic, and so those people ended up with twice the money then? So now they had.
well, not
so now
necessarily
they
twice the money. You ended up with, so when that happened, I had so many Ethereum, and I ended up with so many Ethereum Classic.
Yeah,
but the
but
price of Ethereum Classic is like half or a quarter of what Ethereum is.
But
So-
you're still able to use both,
Yes.
so you still end up with more money that way.
Yes.
A quarter more or whatever, it was more.
A stock split, right?
Yeah.
Yes, it was an
2
interesting
for 3
thing.
stock split or something.
Yeah, it
Yeah,
wasn't
it's
actually like a
something-
stock.
it-
You actually
it
ended up
was-
with more.
It was like payday for me, but hey, that's cool. Because I had been mining Ethereum for a while.
It
So.
was good for people.
Where'd
got
the money
screwed.
go?
Where'd the money?
What'd you do with the 70 million?
I wish.
Yeah.
Did they ever
That's
find
great.
it? I mean, that's my question. This is supposed to be this unbreakable thing.
Oh, what happened with the money?
Yeah, so there's
Nice.
supposed to be this unbreakable thing. That's not the only example of there being an issue. And I know it's the attached technology, supported.
Yeah.
And it's not the blockchain itself, but
It
still,
seems
it
like-
seems like people are walking away with $50, $100 million.
Well, they
on a
did it
ring.
in this case by rolling back the blockchain. They recovered that money.
Well,
Not really.
Well,
Somebody walked away with 70 million.
No, because
It's a bit-
they never cashed it out.
if they didn't cash it out, I can't remember the specifics on it, but he's right. If I could have gotten those Ethereum and I could convert them to Bitcoin, and
But
Been
someone
gone
would have
with it.
noticed the transaction. That's
They-
I don't
And
believe
the
that.
same
yeah.
with Mougayar and the thing in Korea
Right.
and all these other things. Some
Right.
people are walking away with $100 million and it just disappears, and it doesn't seem to impact I mean, it has an impact, but not like
'Cause
I
people
would.
have
I would
religion.
think it would be an imminent collapse, and why does that not happen? I guess is my question.
I think because it's not necessarily, it hasn't yet been shown to be a flaw of the protocols. It's a flaw of higher level processes or programming. Like Mt. Gox, I think was an embezzlement by the founder there, but it was also, let's be realistic, they set up a currency exchange based upon a program that was written to exchange magic trading cards and turned it into a
Like
cryptocurrency exchange.
Yeah.
Game,
Yeah.
Yes.
card game,
Magic
Yes.
game.
Okay.
That was originally started as a program to exchange trading cards. They cobbled onto it to exchange digital currencies and became one of the first to be doing digital currencies like Bitcoin. And then it had a tremendous failure where funds were missing. They couldn't figure out where the funds were. People lost a lot of value at that time.
Okay.
But-
so
but
Because of
those
the
types-
So I got my
blockchain.
son's hockey card collection.
Right.
Am I starting?
No,
My own ICO here?
No, I think what happened, I think it was the exchange
Oh,
who had the one
hockey
pretty-
player collection?
I'm
No,
kidding.
That's
no,
how
it
eBay
wasn't.
started. It was like for trading cards.
Right. But I think it was basically the flaw was not in Ethereum or blockchain or Bitcoin itself. It was the exchange that was flawed.
Right.
Because exchange is a separate thing, right? Exchange is like a
Yeah.
place where you go and trade, right? So it's
What
like
we
eBay.
were talking about earlier was the fact that most of the blockchains are set up on a public-private key mechanism.
Yeah.
If you get access to the private key, you can do whatever transactions you want. and move things out or take funds away. So
It's like knowing your password. If
Yeah,
I know your
right,
bank
exactly.
password,
Yeah.
I can transfer money anywhere.
so I want to move on. But these are some great questions. So with smart contracts, I wanted to call out crypto tokens because that's been part of the whole ICO, initial coin offering, the whole token craze that everyone was jumping in on this past year. Crypto tokens are virtual currency tokens. It says here resides on their own blockchains, but that's not necessarily true. And represent an asset or a utility for, you could think of them like, green stamps or, Safeway points or whatever. They're tokens that a company can say, hey, I'm going to issue you 100 tokens every time you buy $500 worth of groceries or gas or whatever. They are not necessarily intended to be a currency. They're calling them utility tokens to get around SEC regulations on initial funding for startups. But what happened with ICOs is I would say, I have this great idea for an app. It may be blockchain based or not, but I'm going to issue an initial coin offering of my token for 50 cents a piece. And then I'm going to issue, 100 million of them. And you as an individual can get in early to buy into this token. And then maybe if it gets on the markets, you'll make a bunch of money.
So it's fancy way of like doing circulating your shares, selling your shares in a way.
In a way, yes.
To avoid
it became
SEC.
really illegal in the United States really quick. And companies worked very hard. The legitimate companies worked very hard to make sure that they were in alignment to, what investment controls are in place, that they were in alignment with the SEC. Others were just, because here's the deal, is that on Ethereum, I can create an ERC20 token with just 10 or 100 lines of code.
Wow.
I basically create a smart contract that says this smart contract has X number of tokens available to it, and then you go and issue people to their public addresses their portion of that, and then they can exchange with that smart contract, hey, I want to send some to Ken, I want to send some to Ravi, and that smart contract kind of keeps track of the ins and outs, which is a layer above the Ethereum network. So they basically ride on top of Ethereum. So what happened in the last year was you had all these ICOs, Tron, there's a whole bunch of them that were basically, they put out a white paper, here's our crew that's going to work on this great product we're going to create, or this great blockchain event for, come and buy our ERC20 token, and then you'll reap the benefit of that in the future. So there was really a big craze on that, especially when Bitcoin and Ethereum had gone up to, thousands of dollars.
So the ERC20 thing, it's an Ethereum specific thing though, right? You can
Yeah,
do
it's a
outside.
token. So when we talked earlier about blockchains and being a ledger of ins and outs, so basically Bitcoin or Ether is a token that sits on top of that distributed ledger. So what Ethereum did was created a mechanism that you can create tokens that ride on that Ethereum distributed ledger, which has led to some interesting results.
Yeah.
And companies saying, we're going to go and do this thing, and they raise tens of millions of dollars and then disappeared. Or Tron was an interesting one to me because these tokens, they go out and we're going to issue 10 billion tokens, and in our public offering we're going to sell 20%. We're going to issue 10% to our founding group, and then the rest will be distributed in this fashion. Right? And then they pump and dump them on the market, on the exchanges, and make tens or hundreds of millions of dollars.
So let me throw out a really crazy idea. So I'm doing a blockchain conference myself in April of 2019, not here in Seattle, but East Coast. So you said it was only 20 lines of code. Could you actually like create a whole bunch of tokens so that if you attended the conference, it's sort of like for attending the conference is like a, instead of giving some little thing out, it's like you get a token to memorialize the fact that you attended this conference.
Right, yeah. Yeah, you
Absolutely.
And would that be very hard to do?
I'm not an Ethereum programmer, but I don't think it would be that hard to do.
Yeah.
The one thing I don't have in here is called Crypto Zombies, which is interesting because it's a site out there that teaches you how to code Ethereum smart contracts by creating zombies that are unique.
The question I have is, what do people do with those tokens? Can they exchange them for anything? Do they have any value?
Right. Well,
it would simply to be a way to get people to get familiar. Like most of the people attending my conference don't do anything with crypto or blockchain, but it would be a way to get people to go do something with it. Like go set up a wallet and add this thing to your wallet, and this would be the first thing you bring into your wallet. Maybe.
You could print a barcode on each one. Everyone gets a mug with the barcode on. I'm serious, with their coins on it, and they just scan the barcode to
that's
enter the
interesting.
wallet.
Yeah.
So the other thing with these tokens is that any of, like MetaMask or my Ethereum wallet, they'll trap these tokens in those wallets. So you don't even have to create your own wallet software.
Right.
You can leverage existing wallets that support RC20 tokens.
Oh, wow, fascinating. Wow.
So that's the benefit of basing your ICO or token offering based on ERC20,
Right.
that you have infrastructure there.
The
but you
reason
can
why I bring it
basically-
up is because it's been abused, just like anything, right? People are taking advantage of people by saying, I'm going to create this great project, here's my token, we're going to make millions, right? And one of those was a company which I'm still skeptical of, is called Tron. But anyway, yes, you could do that. You could, and I mean, that's also the beauty of this, because it allows you a mechanism to reward your frequent customers that you can track and keep track of.
Or the first conference.
Maybe when you have your
right?
conference next year, for 500 tokens, you get a 10% discount on tickets.
Oh, interesting. Yeah,
Something
that's
like that.
fascinating.
But please consult a lawyer. I'm not a lawyer.
But I work for a
played one
company
on
that makes
Well,
it
if there's no value attached to it, it's just a free token. I mean,
That's what they're calling those utilities tokens, right? Okay, so limitations. We talked about some of these, complexity, jargon, one key to lose it all, keeping track of your public-private keys. If you get access, oops.
everybody saw that guy doing this thing. It was crazy.
Oh, that's my favorite photo.
Buy Bitcoin.
The chairman of the Federal Reserve and the intern putting in my Bitcoin sign.
Like the guy holding the Bible
Sign that.
Bitcoin behind Yellen.
There we go.
Yeah, he received $11,000 in Bitcoin from the community.
Yeah, people dipped him basically.
Just for doing that?
Yeah.
Oh, God, that's just.
That's advertising. Prime spot.
So some of the challenges are complexity, the size of the network. One of the big downsides they're talking about with Bitcoin right now is the amount of processing power and electricity consumed to validate transactions. I sometimes argue that though, if you calculate the true cost of maintaining a fiat value exchange system, not just the electrical data center costs, but people costs and all of that, those are eliminated through a peer-to-peer
In
network.
theory.
Transaction costs and network speed are another kind of limitation. Right now, Bitcoin is doing about 3 transactions per second, and it takes 60 minutes to validate a transaction in the blockchain. Others do it faster. For example, I think Ethereum, I have it in my notes. Ethereum is doing 15 transactions per second, 6 minutes to confirm. Ripple does 1,500 transactions per second, 4 seconds to confirm. Visa does, they're stated that they do 24,000 transactions per second. And PayPal is 193.
Yeah.
So it's not as fast, and that's one of the things that they point to with the blockchain, Bitcoin blockchain network.
It's with a private blockchain, that shouldn't be as much of a problem.
With a private blockchain, no, it's not.
So that's what I think the interesting thing about Ripple is not a distributed, it's a
not
centralized
Yes. it is.
blockchain, right? That's kind of like it's not really private, but it's kind of semi-private.
It's semi-private, yes. And it's become a big interest in the financial institutions. And actually, I know of a project that they're doing with the Gates Foundation to do. So the other thing that has come up in conversations that you'll hear if you read the books from Tapscott about there's 2 billion people in the world that are what they call unbanked. They don't have a bank account. And the thing with the peer-to-peer payment network like this is that you could bank the unbanked with a network like this. And it's one of the things that I think has great value and why I think that blockchains are going to transform how value is exchanged. Value or asset.
Doesn't make a pretty big assumption that the unbanked are bankable?
Yeah,
They
like if
have phones.
you don't have enough money to go to a bank, but you're going to have a computer or cell phone and
You
internet
might
access.
very well have
Or
a cell
just
phone.
anything of value that.
Well, most of the ones that I've seen that are doing that are really using cell phones.
And people have cell phones when they don't have anything else.
But I mean, even if someone only
If you
has
make
a net
$4
worth,
a month,
yeah, if somebody has a net worth of $100 and they're making $20 a month, like you said, I mean, they need a place to store that value. And blockchain is perfect because it can deal with these little micro payments, pennies at a time, and they can do these transactions at very, very low cost versus a bank. And all the, when you go to your bank, it's expensive to do financial transactions.
It's also for international payments.
Yeah.
Where I work in the United States, but I want to transfer money to my parents in the Philippines. I have to go down to Western Union, stand in line, do a wire transfer. My parents have to go down to the wire transfer office, pick up the funds. Those are scenarios that they're looking
Yeah,
at.
except that's gone anymore. You just do that through text messaging anymore. Western Union's screwed. I mean, really.
Yeah.
Now, whether they will build new ones based on blockchain,
I'm
I
not
don't
saying
know.
that blockchains are the only scenarios that are doing
Right.
this, because I know one of the big ones in Africa is through phone payments, through the phone system. Human errors, I mean, it's a system where people put stuff in, so if you put garbage in, you're going to get garbage out. Security flaws, they called it unavoidable in this particular article, but that's what they call the 51% attack. The theory is that if you had 51% of the processing power of the blockchain network, public blockchain network, that you could decide that I'm going to inject my own transaction and change the record, right? To do that today, I think would be extremely difficult, but there are some areas where those are concerns because, like Bitmain, one of the primary manufacturers of hardware for Bitcoin and now other protocols, has a significant portion of the processing power on the Bitcoin network. However, I don't necessarily agree that they control it.
But if you incorporate all the Bitcoin miners in China, they're getting up there. And
Right,
the Chinese government has a lot of power.
And they're also moving their mining operations out of China.
Well,
I interviewed with Bitmain, and they're building a data center in Wenatchee.
yeah, well, there you go.
So garbage in, garbage out, security flaw. In other words, they're saying that if you have enough processing power, you can change the next record in the distributed ledger. And then, of course, politics, regulation, where is this all going to go? We've seen a lot of that in the news this year with the SEC and different agencies and regulations coming through. Real world examples. So I found a company called Grid Plus, which is using Ethereum to do micropayments of electricity, so you pay for the electricity as you use it. And they're based upon the Ethereum network. They also have, it ties in with folks that maybe have solar power, so they're putting onto the grid and taking off of the grid. BitPesa is one that I wanted to call out. It's a company that's in Africa, and they're doing transfers, inter-country transfers in several countries in Africa to create faster exchanges of funds between countries. So it's kind of people wanting to exchange funds with their families in different countries. There's one company that I've been tracking there. And you haven't heard of this, but you may have not heard of this, but CryptoKitties. CryptoKitties was actually a application that was built on the Ethereum network using a smart contract that allowed you to exchange pictures of furry, unique cats. And at one point, a generation zero cat was selling for $10,000 on the CryptoKitties network. The other interesting thing with CryptoKitties, because of the craze, is it actually had impact on the Ethereum network's throughput.
There's so many cats.
Because so many kitties were being traded. But you talked about trading hockey cards. But again, we're talking about each kitty is unique, has its own unique ID, can be tracked from one owner to another. And then you can also, two parties can merge their kitties to create a new unique kitty. So it's an interesting application of blockchain technologies.
It's like we have this amazing supercomputer in our pockets. We can talk to anyone in the world. We can look up any kind of information. What do we do? We watch cat videos.
Yeah.
That's a good
Thank
thing.
you. Yeah.
That's a very good thing. And alongside with that, watch squirrel videos.
And squirrels.
Squirrels, kitties, what have you. It's all possible
And
in
of
the
course,
world
the
of
dogs.
blockchain. Now,
Mm-hmm.
okay, so what's going on with my presentation here? Okay, there we go.
Is that thing on the side, is that your computer or is that
Yeah,
the
that's the
projector?
projector.
It's
It's
the
getting funky.
projector.
Okay, got it.
We're taking donation for new project.
Was that?
Saying
So-
we're taking donation for a new projector.
Yeah.
Yeah.
I have one at home. I can volunteer doing it.
Well, I'll look to get it repaired if it's not.
So,
expensive.
so here are some of my personal interests in investments. So, CoinMe is actually a cryptocurrency ATM. They're based out of Seattle. They have ATMs in Washington State. You can basically
Are
go
they
there.
down at the convention center? Is that one of their machines?
I think
Could
there's one
be,
there.
yeah. And basically you go and you put in your dollars and they give you a receipt for your Bitcoin in your wallet.
Will they create a wallet? If you walk in there as a newbie.
If you walk in there as a newbie, you
Will they
have
create a
to
wallet?
use your driver's license.
Right, but then they'll create a wallet for you on
It
the
creates a
fly.
wallet for you, then you then go and log into your online wallet, and with your driver's license you can then transact your coins with their wallet. It's a way to get from cash to crypto, or even take out cash from a crypto wallet. Another one that's interesting and I've been looking at is called Dragon Chain, and they basically provide a mechanism for creating your own blockchain platform. The interesting thing about it is I met the CEO at a meetup on blockchain. He was working at Disney at the time. They created this Dragon Chain at Disney. They didn't really want to do anything with it, so he created a foundation and is building a blockchain ecosystem. And their focus is on, you can use any consensus algorithm you would like, but also they're building it such that you can leverage your the programming languages you've been using in the enterprise already, like .NET, ASPX, Java. So it's one of those blockchain startups that I invested in and was also kind of tracking. And then another one is Blockstack, and that actually gets into your question earlier because they have what they call the Blockstack ID, which is an ID that you can create. You go on, and what you can do is use social media to validate that you are who you are. And then they're building an ecosystem around that to create blockchain applications. They had a private sale or a accredited investor sale that they did, and then they opened it up, but they're just now starting to issue their tokens and coming out with the next level of their platform. So CoinMe is a physical product that's out there today, Dragon Chain and Blockstack. I think Dragon Chain is further along than Blockstack, but those are just some of interest to myself and that I have investment in. Here's a chart I found online about all of the different areas in the blockchain ecosystem and basically what their focus is. So I'll get Ken a copy of the deck to share out.
That'd be great.
I looked at this and I go, okay, I haven't started with some of these. I know of some that I'm not seeing on there, so this is one person's perspective of the ecosystem, but it's very large. I don't know what the count is today, but I know there's thousands of different tokens.
Yeah.
Because it's open source, you can go and create your own blockchain if you want.
I know just within staffing and recruiting, which is the area that I'm focused on for my conference. My conference is called Blockchain Revolution in Staffing and Recruiting. And so when I came up with the idea to do the conference, I'd only heard of 6 companies, but now I know of at least 50, and I know there's a lot more that are involved in, there's probably like 100 companies just in staffing and recruiting and HR, and doing blockchain work.
And what you talked about earlier about the idea that I have an ID, I have an identity.
Right.
I have data about myself that I may want to publish or validate. But I want to own my data and share it with you. But having the ability to then attach to my identity my credentials from my college, my credentials from my professional certifications.
Exactly.
And then being able to, if the employer wants it, here's my identity.
Right, and then the employer being able to go in and quickly validate that, right? I don't know exactly how you do that, but I give them something, and then they're programmatically, oh yeah, he's a UW graduate, Microsoft MCSE, all of these.
Well, in my identity, I would have a record for the University of Washington that was signed by the University of Washington's
I see.
private ID, which they could then validate.
I see.
Because with the different algorithms, if you put the same value in, if it's correct, you'll get the same value out. Right?
Mm-hmm.
So that's one way that they could do it, is that each of these institutions would then start validating to your blockchain, or whatever you want to call it, that yes, I've issued this degree to this individual. And other things they talked about is land titles.
Right, and real estate and whatnot.
Real estate. But this was an interesting chart, and
that's fascinating.
there's more startups about it. Questions and discussions, and some resources. There's some books that I would recommend, and also some websites that I've leveraged to learn about and different components.
How many different coins are you invested in?
I have about 20 or 30 right now. I still do mining for SHA 256 and Ethereum, so I have mining equipment for both. My main mining is on what we call multi-pool, so this pool will shift. And so as an individual miner, you're never going to mine a Bitcoin yourself. So primarily what you do is you sign up to a mining pool where other people sign up, and then you do a bit of the work, and then you get for the work that you did, you get a reward for that. So the pool that I'm signed up to is called multi-pool, and what they do is they do profit shifting. So depending upon the day, depending upon the value of the day and which is most profitable, they'll shift from one currency to another. So that's
But you have to be able to mine all those currencies. No, you mine one.
My equipment runs a certain algorithm. I can mine any of the currencies that are running the SHA 256 algorithm.
Right.
And is that equipment like in a colo site, or do you have it in the house?
I have a data center in Arlington.
Okay.
That's a home I have up there that I'm running.
But it's out of a house.
It's out of the house, yeah.
Oh, wow.
But I'm
Is that one
currently
of those
have.
under the cover things we've read about that they're not too happy about in Eastern? Well, this is
In Eastern Washington, yeah. That's become a big thing because, you live over there and you get power for like 4 cents a kilowatt. Where over here we pay 10 cents. But yeah, I have a mining operation I do, and it's not as profitable right now. But I also consider an investment in cryptos. So I've gotten all these cryptocurrencies through that profit switching.
Cool. Yeah.
So I get a bunch of different ones, and I think, oh, this is an interesting one. I'm going to buy some more.
I read recently that with all of them going down recently, the only one that was going up was Dogecoin, which was started as a joke.
Well, actually, the big
That
one
was
that's
terrible.
gone up here in the last couple of weeks has been Ripple.
Uh,
Has gone up like 80%.
any particular reason or just random crap?
It's starting to get a lot of price. It's been what happens with cryptocurrencies is once they actually get on an exchange, they seem to spike up. And not all cryptos are on exchanges. That's.
What are your thoughts on the thing that really interests me in the context is I work in the temporary staffing industry. So, and blockchain is a huge threat for the industry because it compresses a lot of value that staffing firms currently provide and enables contractors to directly find employers with bypassing temporary staffing firms, and it enables employers to find contractors directly.
Yeah, you have direct competitors already with like Freelancer and.
Yeah.
all
So you have
those
the whole
freelancer
freelance
sites.
economy thing.
Yeah.
So the whole industry is going to become far more automated, and blockchain is going to be sort of a compressor of value. But what got me thinking about that though was actually this idea of blockchain in the context of like hotel rooms, or blockchain in the context of airline seats. So a hotel chain has a certain number of rooms that it can rent out, right? So you have this inventory. You can put the entire inventory of all these hotel rooms onto a blockchain, and you can drive all those. You could sell all those hotel rooms
Through smart contracts.
Yeah, through smart
Through
contracts.
a smart contract.
Yeah, and Expedia, Priceline, they each take about 10% to facilitate that. So you could really cut out Expedia and Priceline, or at least significantly compress their margins.
You still have to, as a person looking for a hotel room, I still have to go somewhere to find this stuff. I'm still going to go to Expedia or Airbnb
Right,
or
but
what have
at
you.
the same time, you have a whole hotel industry that's managing all that from their own perspective. And if they could publish their hotel rooms on a blockchain and have a smart contract manage all that, just think what they could do with their reservation staff. They may not need reservation staff because the smart contract might replace that and negotiate directly with Expedia or Hotwire, or, without human intervention, right?
Right.
So,
So you have, it just applies in so many places. You have hotels, hotel rooms, you have airline seats, right? You have a fixed number of airline seats, trains, buses, and all kinds of intermediaries the value that they currently provide are going to cut out. Banks, if you can find people with capital and people that need capital for mortgages, and you can somehow validate their credit rating, right? Then you can cut out what the bank does and directly connect people that need money with people that can offer it, and you can validate those credentials that on both sides.
Yeah,
right?
there are, I don't know that they're blockchain based, but there are peer-to-peer lending institutions that are forming, and there's some sites, I'd have to look them up, but that allow you to sign up and loan money. It's like microloans, right? I participate in loaning money to a mortgage.
Yeah. It's kind of like Kiva.
Yeah.
Right.
But I mean, a lot of the scenarios are, and even with Airbnb or Uber,
Yeah, let's talk
you know,
about
you
that.
could set up a smart contract that basically does what Uber does.
Right.
I have a ride, it's available. I publish the fact that I need a ride.
Good evening. If you have items to check out or you need a library card, please come to the checkout desk. If you are using our computers and printers, please finish, save, and print your work by closing time. The print release stations turn off automatically at closing. The library will close in 20 minutes. Thank you for using the King County Library.
But as an end user, I still need a front end. I'm still going to go to Uber.
Yeah, but it can be a distributed app on Ethereum.
Someone has to build it and figure out how to make money in doing it.
Yeah.
I think that's the challenge is, you know, you can put all those assets onto different blockchains, but then you have to have apps that, like you say, make money to facilitate those. So maybe the app itself becomes like a subscription, right? Like, like let's say something like an Expedia, you pay a monthly subscription fee, and maybe that becomes the facilitator of the transactions through these different blockchains.
Yeah. Well, there has to be a good reason for it because there's a lot of investment in the current way of doing it, which works for the most part.
Yeah, the challenge I think is that it's transforming rather quickly, and some industries are being left flat-footed. You know.
Yes.
So do you see this generally as a replacement for a database?
It's just another specialized database. I mean, you'll still have SQL, you'll still have graph databases, you have all these other forms of database. This is a very specific type of database for a very specific purpose.
Right. And it's purpose-driven, and it's primarily from the pure public blockchain, it's about managing trust, creating a no-trust situation, but I can know that, yes, you own this Bitcoin, and you were able to send it to me, and therefore I get it.
Right.
Without having to go from one bank account or another, right? That's the big difference is I could send you a Bitcoin right now if you had a wallet and you gave me your public address. I could send you cryptocurrency.
But I could also do it through a text message here trivially too, because all these systems do that.
Yeah, there's all
Google
kinds.
Pay,
It's not the only payment system, but it's one that's emerging that may
We will see.
change what others do, right? Like PayPal or Venmo, or there's a lot of mechanisms for doing that, and I think it's still really early to see where this is going to go.
Do you have any sort of vision in your head of what the future might look like fast forward to 2030 in crypto and blockchain? I mean, in your mind, what does the world look like with 12 years of evolution of all of this technology?
I believe that it's going to, fiat currencies are going to become less prevalent when they go to a single digital currency or multiple digital currencies depending upon use case.
Worldwide. Yeah.
And I think that this would help facilitate exchanging value between countries. But the challenge is that there's going to be resistance, and there is resistance for that from all of the central banks and global banks.
Yeah. The
So
challenge is
what
for the
country-
governments to collect taxes.
Yeah, what country's going to give up their fiat currency?
I'll tell you how this is going to come about. So you mentioned that ATM. So there was a blockchain conference in Seattle, and the guy who did the first ICO gave a presentation.
Right.
Were you at that conference?
Yes, I was.
Okay, so do you remember the presentation on the doomsday scenario where like a South American country collapses and the whole country overnight switches to crypto? Then the challenge for that country becomes, how does the government collect taxes? And how do they pay all the retirees, and how do they pay for roads? All of a sudden everybody just does their own transactions, and the government doesn't have a way to put their claws into the crypto, and it becomes a huge taxation challenge. So, I mean, maybe governments will figure this out, how to tax people when they've moved to cryptocurrencies that are available across the whole country.
Right.
But his idea was that it would start in a small country, everything transitions to crypto, and then it would sort of this domino effect could domino to other countries.
I think so. You know, for
Haven't countries already threatened to go full crypto and bag their fiat?
somehow, yes, I don't know.
I don't know that anybody's done it.
So the interesting thing is, for me, is that, I mean, the US dollar has been a standard currency through the, British pounds, US dollars, euros. They're kind of standards of how people exchange money. Some countries use the dollar as their currency, right?
Mm-hmm.
And when I was looking at this and exploring currencies, what I found is that, of the trillions of dollars that's in circulation today in the world, about 8% of it is actually physical, where they actually print out a dollar.
Sure.
Other than that, it's debits and credits on a ledger somewhere between banks. And I think there's going to be a lot of pushback because of taxation. And honestly, you hear a lot these days that, well, it's used by terrorists, so we have to regulate the heck out of it.
Mm-hmm.
But I envision that it's going to make payments between individuals easier, not necessarily requiring a bank to do that, or a central authority to manage it for me. But I do agree with you that taxation becomes the big concern.
But can you envision a world like 12 years from now where there's like blockchain just transforms everything? Like for example, recruiting, for example, like the industry I work in. So you are a candidate, you're looking for a job, and these already exist, by the way. Like there are candidate databases that are being built all over the world, right? So I'm a candidate, I'm available for a job, and I've got my resume somehow attached to this blockchain, I've got my skills validated, and my credentials validated, and here's how much money that I'm looking for. And you have some machine learning that just, goes through this blockchain looking for people with certain attributes, and it finds me, and through some smart contract, it, I don't know, you maybe do an interview or something, eventually, I'm selling my services every hour, maybe every single day I work, I'm getting paid. Right?
Yeah. Oh yeah, definitely I would envision that.
So how does that differ from LinkedIn?
Right now, there's
no verification on LinkedIn.
Yeah, there's no really verification. So there are companies right now that are working on LinkedIn. I got my whole work history, but I can change it, right? I can make up my work history, right? Oh yeah, I worked at Microsoft for 12 years, right? Well, unless you actually check Microsoft, you could just fake all of this stuff. So there are companies that are working on validating your work history. So you have to have like 3 colleagues that you worked with look at what you said there on your LinkedIn profile and say, yep, that's exactly what he did. He was a project manager, he worked on this project, these were the deliverables he produced, and validate everything that was there. So you have a little check mark next to your LinkedIn profile saying validated by 3 peers. And so your whole work history is, and your degree from the university.
Blue ribbon program or something like that.
What was that?
Isn't there like a blue ribbon status on LinkedIn that is kind of an approximation of that?
Not that I'm
I'm
aware
not
of.
familiar with that, but just like your skills on LinkedIn, right? Your colleagues.
I agree with what you're saying, I'm still trying to wrap my head around all of it. So-
Well, yeah, it's interesting.
It's another tool that will have its uses.
Right.
Will it change the world?
Here's another question.
Yeah.
I'm gonna
So
wrap
when
up the
somebody,
recording.
like,
Thank you,
asks me,
James. This is a great
What's the
presentation.
use of